All right, good afternoon. It is Sunday, June 7th, 2026. So what I'm showing here is that I have been just sort of slowly practicing futures, adjusting my strategies. As you can see, I've got NQ up, MNQ. And this is a funded account, so I believe it's gotten to the point here where passing the evals is not a problem. I should be able to pass them most of the time. I believe I can just keep repeating that process. So now I need to take the same strategy forward. This is the first time I've actually passed an eval, but like I said, I'm pretty sure I don't feel like it was super lucky getting to where I did. So yeah, so this is a funded account. The rules are, you have to have at least 5 days of winning over 150 a day in the account before you can get a payout. And then, yeah, I mean, that's basically how it works. So my plan with this is just to take it easy. I'll keep doing the same thing I have been doing, which is scalping with 5 micros. I do sometimes do DCA. That's probably to my detriment, but so far I've been okay with it. And I don't know, I've gotten pretty good. It's up in the 75 plus accuracy rate. Sometimes I have days where I make 10 trades and they're all right, so it's actually been not bad. So I'm going to keep on with this, and we'll see. My best guess is that this size of account, the maximum earning potential of this per year is before taxes maybe 250K. Using my strategy, I don't know. We'll have to see how that plays out. I feel like because I still have a chance of blowing the account up occasionally, there's going to be a month or two in a year where I have to start over. I don't know. We'll see how that goes in the next 6 months, to the end of December. But anyway, so we'll see. My hope at least is to make a lot more than I've put into this, because given that I did probably spend 6 or 7 tries, like refining my strategy and making stupid decisions before I kind of got to the place where I can just grind out an eval. So that's good. I think that's the first step in this. I do not like prop firms. I think Top Step is pretty good, but I don't like prop firms in general. I don't think that I feel like it's the risk is skewed really in their favor. However, that being said, I cannot trade with a broker for compliance reasons, so I'm sort of stuck with a prop firm at this point. And so my job now is to run this forward in the future, keep improving if I can. My biggest problem is really pulling trades. Like for example, I would have bought right here and probably gotten out on this spike or gotten out on that spike and missed like this entire move. And that's pretty common the way I scalp. I have a tendency to pull stuff pretty fast off the table. It'd be nice if I could work on that a little bit more, or just, I don't know, figure out how to maybe leave a percentage on, leave half on, or do something for a runner. But anyway, so I'm working on that. Like I said, I don't think this size of account is going to make more than 200 to 300 a year at most with this strategy. I could switch at some point. Maybe if I blow the account up and I'm done pretty well up to that point, maybe I'll switch to the 150s instead of the 50K Express funded accounts. I don't know why anyone would try the 100. I mean, it's just weird. I'll just go straight to the 150. But yeah, so I might do that, and the 150 could make, again, up to 750 a year maybe. Again, assuming that you're not blowing up and having to start over too many times, or so that's definitely a thing. I could pass an eval in a week. That's not a problem. With this size of account, only trading 5 micros, I can average about 500, 600 a day, which is decent. This size of account, I could go to a single contract instead of 5 micros, so 10 micros. But that's probably about as high as you can get with this account size, unless you want to not DCA at all and only use stops, which I just don't use stops right now. And I'm used to it, and I really like not using stops. I don't know why. It's kind of dumb, and I'm sure I'm going to have to adjust my strategy at some point. Because yeah, I mean, somebody can tweet something and blow you out of the water. That has happened to me a few times. So I may adjust that as well going forward. So we'll see how this plays out, and the only other way I could scale this at Top Step anyway, since it doesn't make sense to do multiple accounts there, is to build the account up until it gets to like 100 or 200,000 in the account, and then ask them to let me scale up. I'm pretty sure that this scalping strategy would work up to about 10 contracts, maybe 15. The DCA part, maybe not. So I don't know. Maybe at some point I'll have to accept more losses in turn for using higher leverage per trade. I may do that at some point. Let's switch to like a stop-based trading style, but for now I'm still using this one, and we'll see how it plays out. So that's it. I will say that I'm noticing that my eyes are seeing. I've developed the ability to kind of see just with my eyeballs on the 5-second chart whether the underlying sort of program buying is, whether it's buying or selling, and how strong it is. And it tends to give me the ability to pick good spots where like a pullback is gonna reverse, or a spike channel is going to continue, things like that. So, but what I found is that I do a lot of waiting now compared to how I was before. So, I think when I last checked in, I was probably more sort of trying to figure out at any given moment how I felt the market would go, and that wasn't actually doing too awful, but it wasn't really good enough either. I wasn't quite there, and now I'm sort of waiting more for obvious like imbalances, things where there's people buying and people selling, and it's squeezing the market together, but at the same time you'll notice it's channeling in one direction or the other. Like here's an example of that, where the sellers are actually stronger than the buyers here, but there aren't any big orders in either direction, and it's kind of indicating that there's like I don't want to call it weather or wind or something, but that there's some sort of pressure happening on the sell side here that then collapses. The buyers basically start backing off more, and then the whole thing collapses. This is exactly the type of thing that I trade now for scalping. I'll wait until something like this shows up, and then short it, basically right in here, and then maybe pull out, whatever. Again, I tend to pull out too quick, but that's fine. Another thing I do is that sometimes this doesn't work. You'll notice that sometimes the pressure shows up and it dumps, but you might stay in it too long and then it goes against you, and that's where the DCA tends to work out in my favor. I've found that this type of a signal can also help a bit with the DCA. Actually bouncing enough to help you out. Like even here's an example of that, where you sort of look at this and think, okay, this kind of looks like there's an imbalance on the buy side, but then it suddenly collapses, but then there's still a bounce. It's like the buyers still decide they want to buy, and at some point the sellers get out, and so you get a decent bounce here, which is enough to get out of your DCA. That's dangerous. I'm just going to say it up front. Don't DCA unless you're crazy like me, but I'm still doing it right now. And you can see sometimes the pressure is kind of sideways, and then it's kind of unclear, and then maybe a little bit down, and then here's you get one of these situations where there was a little bit of downward pressure, a move up, and then it just collapses. That's something that you might also take. If this was a little bit more organized, I think I would, that's the sort of thing I might fade a move on. Here's another example of that too, where you can, like there's enough sort of inherent selling pressure there, although you can see it kind of reverses here. So you got to be careful with that. It can often happen that the selling pressure reverses, 30 seconds later, all of a sudden it looks like it's going up instead of down, and you have to really decide: are you going to cut your losses there and take a hit on a trade and just make it up later, or are you going to hold on to dear life and possibly risk blowing up the account, or whatever you want to do? So yeah, there's options there. This is a really kind of a feely process still, but I am basically waiting patiently for things to appear the way I want them to. And again, like, see, these are bad examples, right? Because why? This is data from Friday at like 2 in the afternoon. Nobody should be trading on Friday 2 in the afternoon. The market's not going to behave in a reasonable way there. Maybe earlier in the day it might have been a little bit better to trade that way, but yeah. So I generally stop early on Fridays. Same thing after maybe 10 or 10:30 my time, which is so like 11 or 11:30. Like you start hitting lunch on the East Coast, don't trade. Just back out for a couple hours. Let it do its thing. The exception to that might be if the moves are pretty strong and it looks like there's still a decent amount of volatility in the market, then you might make an exception to that. But generally speaking, those are the times of the day when you're likely to give it all back. So I just don't trade there. But here's an example, right? You can see it's clear that there's like sort of this step-by-step selling pressure occurring. So you could have shorted here, but it didn't actually want to break, and it spiked up again. But here's where you would DCA and come right back down, and you would have been just fine. And the same thing all the way along here. And then you start seeing the opposite. You start seeing a little bit, and I may not have taken that because it's kind of too few bars, but maybe I did, right? So I could have maybe decided to buy anywhere in here, and the same thing, you recover on that DCA. This is a little bit less clear as to direction. This starts to look a little bit down and then a little bit up, but it's too short. Same thing, unclear. Maybe upward here, and then DCA recovers. Again, there's a lot of that. You just have to pay attention to it, and sometimes you get lucky and it doesn't go against you at all. Like here, you could see this is pretty clear, sort of a move, and then it's just sort of like, hey, the selling is still continuing. Somebody tries to buy, and they still get shut down. Boom, and it collapses. Other times it just bounces around on you, and you're getting out with a DCA or something else. So it just depends on how you're doing. But this kind of a methodology tends to keep you in the direction of the short-term trend, which is really what you want to, you want to be against that, especially when markets start to channel for a while. And sometimes you get confused. You might get blown up. Like you might have looked at this thinking there's more selling pressure, and then something changed. Here, this might have actually been news, but you would have had to really hold hard and DC at just the right spot. So this might have been an account blow up here. It's hard to say. So it is dangerous, this stuff. And like I said, I may change my mind and decide to start using stops, but then I have to figure out, okay, how wide is the stop going to be? What's my risk reward and all that stuff? And I just, for whatever reason, I don't like doing that. I like kind of jamming it in the market and letting just see what it does and giving it a chance to bounce and things like that. So I don't know. Not always the greatest idea, though, because sometimes, like I said, price tends to suddenly, in a discontinuous way, change its mind and go in one direction with no pullbacks, and that's where you're going to get in trouble. So anyway, I'm going to keep going with this. We will see how it goes. And then at the end of the year, I total it up, and I'll have a number, and I'll say, okay, this is what I made this year, and then I'll just keep pushing it forward. So that's the deal. We'll see how it goes. Thanks.